All right, how's it going, guys? We're going to start the session now. We are live and recording. Remember that this session is sponsored by PrimeXBT. All right, so if you want to keep having these live streams and the setups, make sure to sign up using my referral link that I post regularly, or use my code Theo Trader. All right, would appreciate your support. So let's start with some of these charts. So I think I would really like to start this session with explaining or discussing sort of that price is random. Okay, you cannot control price. Price is indeed random. The only thing you can use is understand that there are certain levels that holds liquidity, and there are certain price movements that causes exhaustion, right, either to the upside or to the downside, and that causes a shift in momentum, and price sort of rebalances that move. All right, so you always see that on different time frame, that extension causes consolidations and retests, and you're having that sort of over and over and over again. Right, so personally I find Bitcoin and Ethereum slightly difficult lately to be really aggressive and using sort of low time frame trades. I'm trading the daily, and the daily chart moves so fast that it actually feels close to a 4-hour chart or a 1-hour chart. Right, these movements are absolutely insane. So my viewpoint on this is that liquidity is so compressed. Liquidity is so compressed that the price movements. So for this down move, the sell side got depleted, right, and then you had the sort of the positive news coming back in, right, and then price rebalances the whole sort of sell-off, coming back down sort of to the top there, and lately, and even before that, we can argue that Bitcoin has done more stop hunts in terms of low and high. So each trading pair has sort of its own personality, right? So if you see, so one of the reasons why I really like FTM here is because it quite often creates lower highs. Okay, and when it creates lower highs, I find that the entries on both sides, right, both on the buy side and on the sell side, is easier to manage because we're getting lower highs into, for example, the 70% retracement, 80, or even the golden pocket. This makes it much more easier to enter and navigate price. Okay, but for someone that has a different kind of edge than me, they might not find that pleasing, right? So if you look at the way Bitcoin has been trading recently, we do more or less go towards lows and highs every single time, right? It's absolutely insane. So if you look at, for example, this one, we had the stop run, then we had the sell-off, didn't we, right? So if you look at prior to that, you had, look at this, right? So you had one high, right? So we rated that high, second time, third time, you had the sell-off, then you rated the high fourth time, and then fifth time, right? And in terms of bodies, you're having massive wicks to the upside. You're having then another sell-off, you take out the low, you're taking out the next low, okay, and we sell off into the weakness of this last leg, and you're getting that response in price on a Sunday, right? And 2 days later, we are close to taking out the high yet again, right? This is very predatory, and for someone edge that is not based on taking out lows and highs, they can struggle within this sort of price action. Okay, just want to mention that. Now, if you look at equities, FX, and the dollar chart, I find them personally much more interesting and much more easy the past weeks or even months, to be honest, especially in 2023. So let's take a quick look at equities. So equities, if you remember my charts that I've been showing you guys for weeks now, we have been sort of moving to the tick, right? So we had the high there was respected beautifully, and then we had lower high, consolidation, sell-off, retest into that lower high right there, into that base of liquidity, continuation of the sell-off, right? And now we're responding to this. If you go to the 12, it will be much more clear, right? So now we're responding to this bottom structure, okay? And it seems like price wants to come back up and retest some of these levels, right? So this chart has been much cleaner to trade than Bitcoin, and Bitcoin also has been moving, or has sort of decoupled, in my opinion, quite a lot from equities, and is for some reason moving more in sync with the dollar chart again. So let's take this one out as well. So the same goes here for S&P 500. Right? So you're having here lower high, right? Lower high, lower high. Okay, retest into base of liquidity, lower high, lower high. Okay, it's very beautiful and very easy, straightforward price action. Right, it's easy to bet on. Right, so you're having this one. We did take out this particular high, but we did get on each price point. Can you see that we actually had a reaction from that price point? We did have a reaction. So we went slightly deeper into sort of the top formation there. We're having the sell-off, okay, and then yet again we're having a lower high. Just pointing out the price action has been fairly clean on these other pairs, right? So you're having here on the dollar chart, having lower high, lower high, lower high, lower low. Price sells off into some of the support level. It's a bit clear on a 3-day and on a weekly, right? So you're having that massive sell-off in towards 100, 200 EMA there, base, back up, retest, okay, and I'm looking for an expansion higher again. Okay, so this is sort of a clean SR point as well, if you want to use that analogy right there. Sort of a, you can call it a stop run, doesn't really matter. Right? So thin liquidity sitting lower, price coming back up. Okay, and now we potentially, if I take this away for you guys, so you can see, so potentially now we're retesting sort of this layer here of liquidity. I give it a movement back towards, of course it would depend a lot on data points coming up as well, but we're having some of these levels to look out for. So let's do some drawing. So point is, if we do get sort of something like that, right, on the structure moving back up, if this turns into support, this will cause a big accumulation for price selling off lower. If it doesn't, right, you will see the same lower high, sells off. You can see price then coming back down towards these levels. I think would be highly interesting. It should also correspond with the 70 and 80 retracement. If you take from the low, fib here from the low to the high. Yeah, so we're having the 70 and the 0.25 there range right there, right? So if for some reason we do get that sell-off, right, that would probably cause a movement back into these levels. So we're having price sort of sitting at the middle. We're having the 1780 base formation at the top there, and you're having at the low spectrum, this is sort of just sort of creating a consolidation in the middle, creating liquidity to drive price into either direction. Other terms here in equity, I think this one as well is decent. We might fill in a bit of this gap into CPI. And then I will be looking to take a trade here. This is just an idea here. I prefer to get it slightly lower. I think this will be sort of a better idea. But if you go to the daily and weekly, the base of the candle is actually a bit lower, right? So we see how it go. Once this gives 8-hour clear, I think we're gonna go much higher. Okay, so these are this one as well is very decent. Remember that the yen chart, yen is the weakest. So if you do get a sell-off, that would be a very good buying opportunity, in my opinion, to drive price upwards towards the top formation there. As yen being the weakest, usually that would be sort of the strongest mover in the opposite direction. You're having euro chart as well. Reaction lower, okay, and now we're getting back up. This can go higher. If you watch the daily, we had decent support there, and the wick there, you can see the wick can be filled in, right? It's very easy for price to fill in that gap, so you have to watch out for this and be more focused on sort of the rejection and trade into that, right? So if you want to trade into a level, in my opinion, it's better to wait higher. And when you're trading to a near-term level, I think often it can be beneficial to wait for some high time frame candles to signal that would be a good idea. All right, so that's about it for FX. Let's take a quick look at the British pound as well. Yeah, so British pound as well, we're moving into the 1780 for that particular structure from this high to that low. And we also have a base formation slightly higher. This as well, I would recommend waiting a bit higher. That would sort of be the perfect level there. Okay, so often you will see this kind of price action, right? So having a sell-off, price creates the divergence, right? Price tries to sell off, call it traps players, and then moves all the way back up. What happens is that liquidity has been used at these given levels, right? And the order book is so thin at the bottom, there is nothing left there for drive price. So price then reverses and moves back up in search of liquidity, right? So what price is doing there is searching for sell orders, right? So the people who were buying there were, so you can call it that people were rushing in all of these levels, right? So the lack of selling causes price to move higher, okay, if that makes sense. And to find sell orders, price needs to drive higher to find liquidity that is available to price, right? So that's sort of causing a premium, if you want to view it in that point, all right? So higher up into these levels, that's probably going to be a fairly decent sell. Also keep in mind that when you're getting these extensions, either to the downside or to the upside, that is when you want to look for selling or buying, right? Because when price is getting exhausted, that is usually a good place to fade. Now back to Bitcoin, right? So Bitcoin in terms of liquidity makes this, in my opinion, fairly difficult. You know, there's a large chance of price actually moving higher. So if you, the biggest issue, not issue, but one thing to take into your account here, give me a second, I want to point this out. So if you, or what is worrying about the strength of this move is that if you view, let's go to Dow Jones, which is a very clean and straightforward chart. So while Bitcoin was selling now close to its resistance, you can see that, of course, it will depend on the data point, right? So data point dependent, but it does look like price here is sitting at some kind of SR. And we're sort of printing slightly bullish candles. Doesn't mean that it has to close, but this does look like price wants to draw back up, right? Because you had a sell-off there, you had a retest. Now it looks like this wants to retest, right? So having this is a high, this is a low. It looks like the price wants to retest into maybe this consolidation, even higher possible, of course. But this does look like it wants to retest. Now, if equities are going to retest, most likely the dollar chart will continue to spike into the lower end towards $102 mark. Okay, if of course that happens, how will Bitcoin react, right? That should cause sort of a larger price movement for Bitcoin, right? I think, you know, that will look something like that would make sense if you use a channel on Bitcoin. I haven't put it on, just want to see. Yeah, maybe something like that could be possible there. Like very easy for price actually to come back up in towards 26, 27K, okay, for a spike. And now the other thing I just want to view here is the ADR on a weekly and a monthly. I just want to check here where we get the right. So on a weekly, we're getting extended. Let's use the monthly. All right, so for the month, we got some room, right? So on the monthly ADR, we only hit sort of the primary. Okay, so we're having actually two levels there that hasn't been hit as the ADR. Okay, so that will cause high, and then you're having the extended version, right? Would sort of correspond fairly nicely with, that's probably the 70% retracements. Let's take a look. So from this pivot high to that pivot low, yeah, that's very close to the 70, right? So having a big level higher, right? Which is sort of a level that if we do extend the way we have, this is a level of distribution, right? So then you have to be more finite with finding sort of an exact entry. But as far as if you go to sort of the weekly chart, you can argue that this is sort of a level that price would potentially distribute at some point, right? So if you go to the daily 12-hour, you can see by the strength, right? So if you do get that massive extension into that, right, it creates weakness that can be traded. I think 28,000 mark is a massive level if you do get that extension. Okay, so let's again see how we can view at the bearish price. But now the way Bitcoin is at the moment, you don't really want to discuss a bearish case just yet until you see some kind of a confirmation, right? So you're having two ways this can unfold in terms of confirmation for Bitcoin, and that will be one, that we will get sort of a raid into some of these levels and then sort of get that sort of a rejection and say, okay, so we're creating sort of price might come back down lower, right? And that's a larger distribution rates to take price lower. Okay, having that case. The other case is that you have to wait for price to either do as I just mentioned, or wait for price to exhaust itself as moving towards 28K. And the last one, which is also of course the most difficult, is to wait within current range, and you have to wait for a minimum of an 8-hour bearish candle, right? So you want whatever it does, but you want some kind of a bearish candle closing near the top to sort of show you and give you some kind of a confirmation, right? So if you view this as a fractal, if you watch here, if you take one of these top formations, right, then you would need to watch, something like this, right? Something like that. You need some candles there to tell you that, all right, potentially we're getting exhausted, right? If you don't have any candles whatsoever to show you that price is getting exhausted, there's nothing there as a bearish trade setting up at the moment, right? You have to have something to lean on, right? Or else it will just be wildly guessing on hoping for it to come down, right? So you need some candles to confirm your bias, or you need to wait higher, right? And as far as it goes for longing, I don't know. I don't long expansion candles, right? Then it's over, right? So it means that you lost when you missed sort of the price move. That's when you are sidelined, and you just have to eat, that bad apple and just wait for the next opportunity. Okay, so let's take a look at some of these altcoins. Same goes for FTM. I would like an extension. I would prefer slightly higher. Okay, I do prefer higher. To get in, the best case, would be towards 0.5. That extension would be great, but just getting a small pop there could as well be decent to see a sell-off. There's no massive trade. We can find some else here. So if you do have on Ethereum as well, right? So we went into the 70 and 80 retracement there, and you can get sort of that lower high. That can continue lower. Now, we mentioned that in many previous videos as well, that we're having that, give me a second here, so you're having that particular high, okay? And right, so this high is of interest, right? So until I said I don't want to short Ethereum until we actually break that, right? So if we do get an extension into this particular level, I think that could set up sort of a decent sell-off. So just frame that in terms of fractal. It means that you're having this high, okay? You're also having right, that high that we're just taking out as we speak, and then you're having liquidity sitting there and liquidity sitting as well at the next one, right? So both of these levels sitting in liquidity, and you're having that void, right? As price moves into that level, right, we can potentially see a distribution playing out, right? That sort of would be a level that I could be interested in trading, right? Until then, I don't like this structure. I find it highly difficult. We're just going for stop runs, right? So if you look at that one. And if you look, let's take away too much clutter. And you view this one, right? It just seems, price is just reaching sort of for highs and lows, right? Sort of perfect for bots, grid bots, whatnot, right? So it just goes for lows reversing highs, reversing lows, reversing highs, and that's been going on for quite some time, right? And you can see that's even a fractal basis here, and sorry, on a daily and a weekly, you're seeing that price is actually getting compressed from that high to that low, setting up for a larger move, right? So if you go to the weekly, let's take everything off, right? So we're having also the 100 EMA a bit higher. Okay, so that's what I'm watching for these ones. Okay, so I don't find any massive edge at the moment, okay, until something plays out. Now, let's discuss slightly here what is going on with the CPI. So in terms of CPI, we are expecting, they're expecting 0.5 or 0.4% lower inflation, okay, and they're also looking for inflation to come down from 6.4% to 6% year to year, right? So year to year, they're looking at 6%, and the main target, right, is 2%. So they have to keep these rates relative high for price to come down, right? So if we are seeing a 6% inflation, 6% in inflation, and the target is 2%, it's not over. So by our current the current tapering and the current rate hikes that the government, the Federal Reserve, have, gives around 0.4% lower each 2 months or each month. I can't remember now exactly, right? So and that is sort of the dot plan as well. That you can see sort of what do they expect price or how do they expect the inflation to develop throughout the next months, right? So that means that they need to keep the rates elevated to reach the target. The only question is now, will we continue to it, right? So if the government said that they won't continue and they will sort of pivot, meaning that they won't rate or give any more rate hikes until further notice, that will cause a very optimism signal to the market. Now, on the other hand, you can argue that they want to continue to follow the plan, and that they think that if they do start now to pivot, they will do it prematurely, meaning that most likely it will cause sort of the recession to prolong much more than it has to, right? So it's better sort of to cut off the hand straight away instead of waiting for a much longer period of time, right? So we will see how this develops. So in terms of trades, let's just do a quick recap of what I'm watching. So I think the way Bitcoin is looking as we speak, both on the weekly and on the monthly, it does look like it wants to move towards 28-ish thousand, right? You can't argue. Okay, I was thinking that we wouldn't get that before we had this expansion. Once you have that expansion, you can't deny that. This does look very bullish. But we're having CPI, and the way Bitcoin moves, it can change within a blink of an eye. So let's just do the recap of the trade ideas here. So you're having to see that if CPI turns out to be positive, meaning that the markets do get sort of a big pump, then if you do come back down, something like that could set up a consolidation overnight that you can sell, stop loss below, right, and then look for sort of prices to take you back up, right? So, but this particular setup will depend on the CPI print and sort of overall optimism of the market, right? Not just PA. And now the bearish side is that price does a quick move up, right? And you can sort of look for a potential fade and trade the stop and see how that goes, and see if price coming back down, and thinking that this will sort of turn into a resistance and then price come back down much lower. Okay, now the third idea is that you have to wait to see at least for an 8-hour, 4-hour, 12-hour daily candle close into this spectrum here of price, signaling price exhaustion, and then you trade the breakdown, right? So it means that you wait for 1-2 candles, small body candles, pin bars, hanging man, whatever, right? And then you trail sort of the stop loss above and looking for price to come lower. Okay, that is sort of the idea. Mostly that you can trade on Bitcoin. Right? I don't have any other viewpoint at the moment for Bitcoin. I think rather when it comes to equities, I think you can argue that there could be a trade setting up here to take price higher, but regardless, I think if you do get a pump here, that would be a very nice one to fade and sort of use this as a distribution level. Right? So you're having this is the bottom of the formation. This is give me a second. This will be sort of the top, right? So you know you can call this gap or whatever. If price comes into that level, you know you can look for a fade, okay, and then sort of hedge your portfolio taking price lower. Okay, that's for equities. Now, in terms of the dollar chart, is the same. I think if you do get a squeeze back down, you can see this wicks. Let's go to a 12-hour chart. We may be more clear. So if you do get a squeeze, even now, it's not a bad place, to be honest, to take the trade. But if you do get a squeeze, I think into these particular wicks, something like that, that's probably going to be a very good place to potentially fade sort of the idea. Right? So then you can get, let's just give me a second here. So in terms of price action and fractal base here, you can get sort of a squeeze, right? A sell-off, sharp sell-off due to CPI that can be traded into, and then looking for price to come back up and create sort of a higher high. Okay, and that's sort of for the dollar chart. Now you can use that idea, same concept here. Will go sort of to the British pound chart here, moving slightly up there. Could be a decent one to fade lower. That would be also a lower high. So you're having a double top, potential lower high. Okay, and then you're having here the same goes for yen and USD CAD as well, coming back down into this core consolidation that can be bid. Risk, just you have to sort of just use one of these small body candles there as a pivot, and see what kind of R you are interested in. Okay, Euro USD as well, the same here. I think slightly back up there makes sense, and then sort of getting that larger sort of sell-off. Okay, that's what I'm looking at for Euro USD. Okay, and that's that's it basically at the moment, right? There's nothing more really to discuss, right? And let's just see how things are unfolding. I'm gonna keep you guys updated as we move forward. Okay, guys, peace out.